Is the US dollar trash? I believe it is. Maybe you guys put it in the chat if you guys believe it is as well. So I've spoken about this quite often. We all have $100 bill in our pocket, I'm pretty sure. And we look at it. What does it say? It says 100. It said 100 5 years ago. It said 100 10 years ago. That's called a nominal value, 100. Okay? But is it really worth 100? Think about this. Just because it says 100 on the bill, is it still worth 100? No. Why is that? Is because, again, goes back to our borrowing and spending habits. Every time we do that, we supply more dollars into the market. In order to supply more dollars, we don't print on paper anymore. We just add zeros to the ledger to create more money out of thin air. Well, when you create so much of something, just like everything else I said before, and then maybe people just go like, that's not that simple. It is that simple. It's supply and demand. How much supply are we providing? How much supply of dollars are we providing to the marketplace? Into the trillions. Well, just in the deficit alone, $3 trillion. Okay. If we're supplying so many dollars, what happens to the value, the actual value, the notional value of that $100? It loses its value, right? Because we have a lot more of something. When you have a lot more of something, the value of that something, it could be tomatoes, potatoes, and lettuce, whatever it is, eggs, or currency goes down. Well, it's a fact. That's been going on. Just this year alone, US dollar has lost close to 11% of its value against a basket of other currencies, okay? Such as the yen, such as the euro. Well, remember that $100 bill that you're looking at? Okay. Well, that $100 bill is losing, it's called debasing of the currency. It's losing 6-7% on average for the last 5-10 years. So let's take that 6%. Let's make it simple. Multiply it times the last 5 years times 5. That's 30%. So that $100 bill that you're looking at that still says 100 and it said 100 5 years ago, now it's only worth $70. And you can experience this yourself when you go shopping. With $100 5 years ago, you could have gone out and bought a bunch of stuff. If you have that basket in your mind, why don't you just go take the $100 today and go spend the same $100 on the same goods you purchased 5 years ago? On the internet, there are a lot of people who are doing these types of comparisons. That's another word for how much of that buying power are you losing per year? Well, it's about 6 or 7%. And as opposed to just yak about it, and here are the facts. These are the facts. And this is the US dollar chart on the right-hand side, how much value it's losing. The fiat currencies in general around the world are losing value because all governments are creating more fiat currency. When I say fiat currency, it's dollars and yen and yuan and euros and Australian dollars, Canadian dollars, whatever it is. So when fiat currencies are losing this much value, it's called a bear market, right? Bear market meaning your 100 is worth 70 in 5 years, it's going to be worth another $30 less. So no economy has maintained an average inflation rate below 2% since the end of the gold-backed Bretton Woods system in 71. As you guys can recall, we were on the gold standard, meaning we couldn't issue dollars unless we had gold backing those dollars up. And it was during the Nixon administration where they went away from the gold standard. When that happened, economy took off because borrowing became a lot simpler and cheaper for the government. Economy took off. Initially, actually, it was okay. But now that every dollar that we borrow returns about, ROI is about 46, 48 cents. Well, now we're like literally, we borrow a dollar, we're losing half of it. Okay. And that's your buying power loss as well. So, in other words, the value of fiat currencies has fallen by at least 2% annually over the last 54 years. You guys see that chart? That's the chart of 54 years. So, meaning what? Even if it's 2% and 54 years, 54 times 2 is 108. Literally, if you had a $100 bill that same nominal $100 bill that you were looking at 54 years ago, and some of us old enough to know that, that currency actually is negative $8 now. It has lost all of its value, all of its buying power, just by 2% inflation, okay? For example, the US, Canada, China, and France have averaged around 4% inflation over this period. And I believe it's a lot higher because I know governments gaslight the folks in their countries. I think it's close to 6 or 7%. And you can feel that when you go shopping with that $100 bills. Meanwhile, Brazil, Argentina, and Venezuela have seen their currencies collapse by nearly 100%. Those are the hyperinflationary countries, right? Argentinas and Venezuelas and Brazils. Imagine living in those countries. Basically, everything you buy this year is 100% more expensive next year because it's losing your fiat currency, local currency is losing 100% of its value. Imagine how difficult it would be to live in those countries, because I'm pretty sure nobody's paycheck in those countries, right, is going up 100% every single year. So in order for you to keep pace with all this, folks, your income has to go up by 5, 6, 7% a year just to keep pace with inflation. Inflation is gold and crypto's best friend. Absolutely. And that's why I keep saying what on this channel? I've been saying it from the first day on. Don't slave harder, save in our hard assets. Why are hard assets where they are? It's exactly because of that reason. Okay. So gold at 3,500, Bitcoin holding right about 118 range, Ethereum now taking off, doubled over the last couple of months, 3 months. Real estate all-time high. But what does that do? It makes housing affordability in the tank. Nobody can afford a house. A couple in their 30s, college educated, maybe their incomes are not enough for the down payment and afford a mortgage. Same thing is happening everywhere around the globe, except that we're the best one out of all the worst ones, supposedly. But then how's that affecting you? Is your paycheck going up 6, 7% a year? Is your employer paying you 6, 7% a year more every year? And you need to do that just to keep pace with inflation. And that's why I keep saying education is key, information is key. You have to invest. You have to invest in hard assets because they're the only saving grace. You can't keep money in a bank at 0.5% savings account or even put it in a CD at 3, 4%. You're still going to lose. It's better than nothing. You can put it in money market at 4%, but then you're still going to lose maybe 2, 3% of buying power. It's better than losing 6, 7, of course. But that's what I'm trying to say. All fiat currencies are in a bear market. All fiat currencies every year are losing value. Even if there is 2% inflation, okay, which I know it's not, we're losing value on that $100. So you have to invest, or you have to have a job that pays you 5, 6, 7% a year more every single year. Now, if you're working for somebody else, I don't think you're able to do that. But if you're an independent contractor, if you're a plumber, air conditioning, contractor, electrician, whatever you are, now you have a chance, especially if you own your business, you have a chance to increase those prices or increase the bids that you're offering to your customers. You have some sort of control. But if you're working for someone else, which 95% of the country works for someone else, I'm assuming it is 95%. It could be lower. I know small businesses are important for this country, and there are millions and hundreds of millions of small businesses. But then their pricing power is not there either, because what happens is that if you own a small business and increase your prices to the point that the demand dies, right? So there is a catch-22 in all of this. But the key is US dollar is losing its value. It's the prettiest girl in a very bad house, as we know, but that doesn't mean you're not losing money. You're losing value on your $100 bill constantly. And you have to invest. You have to invest properly, long-term investing, dollar cost average into hard assets, whatever you can put away. You have to, just to keep pace with all this. Now, if you can do 2x, 3x, 4x of the benchmarks like S&P 500 and things like that, then you're in great shape, right? It's difficult to do, but it's doable. And that's what I'm trying to do on this channel. So